It's about that time of day again here, boys and girls. Welcome back, welcome back. The second day of the 6th month of the year. Welcome to June 2nd, 2014, a Monday evening here in our corporate headquarters at School of Trade in Los Angeles, California. My name is Joseph James. Welcome back to our nightly newsletter. Hope you guys had a great weekend. As I said last week on Thursday evening, you know our weekends, boy, we got to spend that time resting, relaxing, refocusing, spending time, our most valuable commodity with our family and friends. Hope you guys had a great weekend. Boy, do I have a treat for you this evening. We have a jam-packed newsletter on schedule here for this evening. I can barely contain myself. First of all, we'll take a look at what happened in the markets today. Markets were moving, but we got a bit of a curveball this morning, didn't we? A little bit of a snafu with the news at 10 a.m. Got things moving and shaking. We had gold grinding lower. Boy, gold is on a move lower, but it went sideways today, and I'm going to talk a little bit about what happened on gold. Russell moving lower as well, but I'll tell you, boy, the Russell is in a really difficult spot right now. So stick around. I'm going to show you guys some charts and show you why I say the Russell's in a pretty difficult spot here right now. And, of course, you can't forget about crude oil. Crude, apparently the buyers just kind of left us hanging here last week. We made a big paycheck last week on crude. Was hoping to get some more buying opportunities, but not so fast. Now all of a sudden, backing off the border of Ukraine. We got some of the geopolitical stuff calming down a little bit. We saw some news that may not be so inviting. So crude's moving lower right now, and we've got some selling opportunities on crude. Once we take a look at the markets today, I'm then going to go out and grab some news for tomorrow. We'll get ready for tomorrow's news. We'll get prepared. We have a huge week of news ahead of us. You've got to be prepared for this week. It's big, important news this week, especially later on this week. We'll talk about the news today. And, of course, you know me. I'm going to make you wait for the good stuff. I got the good stuff coming towards the end of the newsletter tonight. We're going to roll up our sleeves, open up some charts, and get ready for some trading opportunities starting tonight. That's right. You don't have to wait for tomorrow. Starting this evening in Asia, Australia, and then going into Europe. So busy schedule here for the newsletter tonight. But I've got some housekeeping issues here for you. First, if you're watching this newsletter on our YouTube page, if you're not watching this video right now on our blog, make sure you get over to sidewaysmarkets.com. Find the link below the video and get yourself over to sidewaysmarkets.com. That's our trading blog. Now, besides the plethora, right, the whole potpourri of amazing trading resources on our blog, I want to direct your attention, though, to 3 very important components on our blog. First of all, I do all this hard work every night, and I want to share this with you, all right? I take a little bit more time every evening, and I upload all my charts over to slideshare.net. Below tonight's video, you're going to see a link, and that link will take you over to slideshare.net so you can download all of my charts. So every single one of the charts I show you tonight, you can download and get a copy of your own. Now, that can be used tomorrow in my trade room. Okay, because we always go over the newsletter levels so we can use them the very next day. So you can use them tomorrow with me in the trade room. Or you can have them next to tonight's video and you can make your own notes, whatever fits you best. But make sure you get a copy of those charts. All right, I don't do it for my health. I do it so you guys can use it. And then, of course, don't forget here, up top, you're going to see here up top, you'll notice we have our free pass. Now, you guys got to take me up on this offer. You got to take me up on this offer. Come out and see me tomorrow afternoon as a guest. You don't need to be a member. Check out the free pass. Come in and join me in my trade room. I want to show you tomorrow in real time how I use these charts tonight to make money 24 hours later. That's right. The charts I'm posting for you tonight, I'm going to use them tomorrow morning, tomorrow afternoon, and I'm going to show you in my trade room. So take me up on my offer. Click right there. Give me your name and your email address. I'm going to send you a link to attend the trade room tomorrow as a guest. And, of course, we can't forget about My Ugly Mug in the lower left-hand corner here. Just go track down My Ugly Mug and give me your name and email address right there, and that will sign you up for our nightly newsletter list. if you want to get an email from me every time I send out this newsletter, Monday through Thursday, 8 p.m. Eastern Time. That way, you've got it coming right to your inbox. Give me your name and your email address, and I'll put you on my nightly newsletter list, and I'll always send you a VIP copy. So get on over to sidewaysmarkets.com, download a copy of the charts, take me up on my offer for a free pass to attend our live trade room, and remember, follow the ugly mug, and give me your name and email address to add to our newsletter mailing list. Enough of the chit-chat here, JJ. Let's get moving forward here. What happened today in the markets? Now, gold seems to be on everyone's radar right now because we have a big news report on Thursday morning out of the ECB. I'm not going to talk about it too much right now. I'm going to save that for the next section of our newsletter, which we'll be going over in a moment. We'll talk about the news for tomorrow soon. But right now, though, we had a huge move lower on gold last week. If you remember, we really didn't get much of a chance to catch up to it here for the most part. For the most part, it pretty much just took off the downside here. And now, just above last week's low, we trade sideways. So we got last Friday's low down around 1242.2. Last Friday's high, 1256.7. We closed at the low, and we opened as if nothing had changed. Now, I hope I'm not right about this, but my gut tells me this gold's going to be a little bit sloppy this week ahead of the ECB announcement on Thursday. Big things coming out of the ECB on Thursday. I'll talk to you more about that in a moment. But that's what we can kind of blame it on right now if we're trying to find some sort of idea of why this gold is acting like this right now. There's some big news in the hopper later on this week. Very narrow range on gold. We closed pretty much right on top of the volume here this morning. This is just screaming at me right now, balanced. And this is not the first. This will not be the only market we see balanced today. The Russell was just like this. So notice we closed at the 46s. We opened at the 46s, and all the volume was at the 46s. So we opened neutral. We closed neutral. The volume is neutral. Any guesses what I'm going to call this? It's a balanced market here on gold. Definitely bearish, but we definitely have a balanced range for today. Now why? Why are we so balanced? Why are we bearish on gold? Well, you got to stick around a little bit longer because in the next section, I'm going to open up my anchor charts on gold. I'm going to show you exactly why we are due for a correction. We're due for a retracement. We're at some major support levels that are below us on some longer anchor chart time frames. Stick around for that. But today, a very pathetic market, a very pathetic range on gold. And remember, when I see a narrow range, and guys, if you haven't been paying attention with me, or I shouldn't say paying attention, if you haven't been following along with me in the past few weeks, I know that between 100 and 200 ticks of range is going to be typical. If I can spell today, luckily I'm not an English teacher, right? 100 to 200 ticks is typical. Below 100 is narrow. Above 200, yep, that's going to be wide. So we have a relatively narrow trading range today. Now, narrow range today, wide range tomorrow. Wide range today, narrow range tomorrow. So gold was basically kicking his feet up on the desk today, hanging out. So tomorrow should be a much wider day. But again, hold on tight. I've got some big red flags right around the corner here for some news that I think this gold might be waiting on. All right, so now you know what the deal was today on the gold. A completely balanced market personality on that funny yellow metal we call gold futures. Now, you want to see balanced? You want to see balanced? Here we go. Here's my balanced market of the day right now. You look up balance in the dictionary right now, and this is probably where you'd see, right, there'd be a picture of this chart here. Maybe not as balanced as it could be, but take a look at what we see here today. First of all, had a pretty strong session out of the old mini Russell, or as we call it in the trade room, good old Rusty. Well, Rusty moved 179 ticks here today, which that should not say narrow. That should say typical. Sorry about that, little typo. That should say a typical range today. So nothing too crazy out of the Russell. And as you can see, it was pretty much, well, let's look back in time here. This was last week's range. Yeah, that was all of it. That was it right there. So we were balanced as balanced can be coming out of last week. You'll see here we closed right in the middle last Friday. This morning we opened up right off the bat here, and it was only a few moments until that 10 o'clock news came out. Now, there was a bit of a little snafu today in the ISM manufacturing number, which was our red star news of the day. We opened up here this morning. We pushed lower. We had news that came out at 10 o'clock. That news was lower than expected. This is manufacturing. And if you've heard me say this before, you know what I'm going to say, right? Manufacturing, in my humble opinion, is one of the biggest variables that we need to watch closely right now, at least here in the U.S., because this manufacturing industry, it supports the middle class. And a strong middle class definitely going to be a very good thing for a strong economy, even though our politicians seem to have a different technique of growing the strength of the middle class. I'll leave my opinions out of it. You know who I'm talking about. So we have the news that came out at 10 a.m. Well, sure enough, this news, ISM manufacturing, came in about 53.5. Still above 50. Remember, 50 is the barometer. Above 50, we're expanding. Below 50, we're contracting. That was the issue with China a few weeks ago. In fact, they're still dealing with it here. China has a big problem with manufacturing. They are in contraction right now below 50. So that's what's leading to this overall global concern about manufacturing or the overall global economy. Well, sure enough, what was it, at 11 o'clock? At 11 o'clock, the ISM comes out and says, no, wait a second, we were wrong. It's actually 56. Now, that puts us above what the expectations were, right? So then, of course, the market kind of pauses a little bit and says, what? You what? You're what? You're wrong? 56? Okay, 56 it is. And then sure enough, a half an hour later, they come back and say, wait, no, we were wrong again. It's actually 55.5. Our bad, right? We'll give you a mulligan on that one, ISM. We'll give you a mulligan on that one. And that really, it was interesting because it gave us that big rally back up. Now, I'm not a big believer that the news is that long term, but this was a relatively easy to see reversal all off of that news here, and it comes right back up pretty much to where it began. So kind of a little bit of a roller coaster ride there today on the Russell. It was relatively fun, selling short on the way down, and then whoops-a-daisy, ISM comes out and says, no, we got that wrong. And then you saw, of course, buying right back up. So it was a relatively easy scenario as long as you didn't try to read into that news too much. Just follow the pattern, follow the trend. You know what I'm talking about, right? Every day I come in, I'm not going to overthink this thing. I'm not that smart of a person to begin with, right? It kind of gives me a headache when I think too much. I'm having fun with you guys right now. But I have 3 jobs every day. When I come in, what's my first job? What's my trend? Second job, where are my levels? Third job, what is it? Most important, what's my personality? Because the personality, even if we're bearish, I still need to have a bearish personality at that time for me to enter into a trade. There is a graveyard of traders, and that graveyard is filled by new traders who had direction right. They had levels right, but they didn't have the personality right. And it doesn't matter what my trend is if my personality at that time isn't conducive for success. We talk about this every day in our trade room. So we, of course, had 179 ticks. Again, pretty typical range. We opened in the middle from yesterday, or from Friday. That was neutral. We closed in the middle of today's range. That's neutral. The volume, now this is pretty interesting. The volume, look at the volume spike here. 28.3. Could that be anywhere more convenient? It's Fridays. It's a weekly low. So again, like I said earlier, if I had to guess right now one word to describe this Russell, it'd be balanced, right? B for balanced, because the low from last week is exactly where we closed, and that's exactly where we have our volume. Now, why would the Russell be so balanced? Aren't these Z-minis all over the place these days? Isn't this a market that should be moving? It should be, but we got some big concerns about the Russell, don't we? I talked about it last week, a few times last week. We are we are stuck in between some major support and some major resistance. Hold on tight. I'm going to show you more about the good old Rusty in just a few moments. And then we got the, pardon me while I sleep a little bit here, we got a little bit of a yawner today on Crude. It really was a yawner today on Crude. There were times there when I almost shut down the charts on Crude and went looking for something else. This is a market that we have to understand. This market on crude oil right now is a little bit, it's suffering from some analysis paralysis. We've got these issues in Ukraine keeping prices propped up. We've got concerns over the manufacturing in Asia. Overall, we know that's dragging prices down. We get a big concern out of Europe, which they're going to hopefully address on Thursday, of deflation, right? Deflation. Now, inflation's a big topic these days. You want to remember, though, deflation is when not only are we seeing our currencies go lower, right? So currency value goes down, but the cost of goods and services are also going down, all right? It's not the same as negative inflation, all right? So deflation is a big, big risk to Europe right now, okay? This is one of the reasons why our Federal Reserve Bank is always playing around with interest rates and monetary policy. They're trying to keep that balance of interest rates, inflation, basically the cost of goods and services, the PMI indexes, right? All these things. So a lot of complicated stuff, but basically right now, though, we have a little bit of a balancing act we're going on with crude right now. We're moving lower in the short term, and it looks like we're probably going to keep going lower. But when you look at this chart, though, you can see, boy, they dipped their toe in the water here right below that prior week low, but couldn't stay going lower. So first of all, pathetic, right? Crude and gold, they should hang out in the weekends because they're pretty good buddies right now. 67 ticks, 60 ticks on crude. Come on. Nothing, right? Absolutely nothing. We did more range today on the S&P than we did on crude today. So clearly crude waiting on something. And remember, we can't force it. So what we have to do is we have to beat the game the way the game's being played. We can't change the game. If it's going to be range bound like this, we're buying lows, we're selling highs, we're staying away from the middle. So narrow range today, closed just above that prior low a day. It's a big clue. That's a big clue. It definitely tells us we're not as bearish as we may think we are right now. We opened up in the middle. Literally nothing happened over the weekend. Nothing happened over the weekend. We open up right in the middle. We spend the day pretty much grinding sideways here. We got that news that came out, of course. Pushes lower, back up. We close right back in the middle. We open in the middle. We close in the middle. The volume right in the middle. Now, big, big clue. Look at the volume. The volume was above or below the low from yesterday. Volume stayed above. What does that mean? Remember, think of volume like an election. I go in, I cast my vote. Every time I place a trade, I cast my vote. And the volume piles up where the most amount of trades occurred. Where the most amount of trades occurred, that's where we know we have the accepted value. Think of it like this. Think of it like a car dealership. Maybe not a good example. Let's see here. Yeah, think of it like a car dealership. And let's say, for example, that this week I'm going to run a test. All right, I'm going to put out a brand new BMW, which has a blue book of $50,000. And I'm going to do a test. Okay, the blue book is 50 grand. And I'm going to start out by putting that car for sale on my lot at $35,000. Okay, that's going to be today. Okay, so now everybody heads up. I got a brand new car for sale. It books at 50. I'm going to sell it to you for $35,000. Do you think I might just get a few people that buy it? Absolutely. But tomorrow, I'm going to raise the price. Tomorrow, I'm going to raise that price now. I'm going to raise it to $65,000. All right? And then later on in the week, I'm going to drop that price, we'll say down to $20,000. All right? So today it's $35,000. I'm going to start raising that price to $65,000. And what do you think is going to happen? I'm probably going to get a lot more people to buy, right, at 35,000. As I start to raise the prices, right, I'm going to get fewer people. In fact, I probably won't get anybody at all to buy it at 65,000, right, because the blue book's 50,000. Then later on in the week, we drop the prices, right? We drop the prices, and you know what's going to happen. More and more and more people are going to show up to my dealership now to buy that car. Why? Because it's priced to go. It's priced at a discount. So what is that? What's the kind of the example I'm giving you here? The market is going to tell you if it agrees with that price. So the people, right, the buyers that show up to my dealership lot, right, JJ's used cars with a brand new BMW. I guess that defeats the purpose of used car lot, right? Brand new BMW. So we'll call it JJ's new and used BMWs. See, there you go. And now, when I raise the price higher above the blue book, what happens? Crickets chirp. The lot's empty. Nobody comes to buy. But when I start to drop that price, what happens? People know that's a value now, and they start buying. They start buying more of it. So what does that lesson tell you? It tells you that wherever we get the most amount of people showing up on the lot, whether I'm selling cars or whether I'm selling crude oil futures, where did the most amount of people show up today? The most amount of people came out to play with crude at 102.45. No, it wasn't at 102.10. No, it wasn't at 102.77. So that tells me now that the buyers and sellers have agreed on value. And that value, this is all market profile theory. All right? Remember, market profile is a theory, not a strategy. Market profile theory, right? We have balance. 102.45 is where we have the most amount of volume, and that's where we can assume the most amount of traders were participating. Why? Because that's where they saw value, whether it was either going lower or going higher. So this was above last Friday's low. It was above our low for today. So this tells us right now another market looking very, very balanced. So we had gold that was balanced, Russell that was balanced, crude that was balanced. What do we have to do to shake these things up? Well, I'm glad you asked. First things first, though, let's take a look at the news for tomorrow, because this is going to be a big, big, big busy week. We get a busy week here in front of us. So tomorrow, of course, is June 3rd, Tuesday the 3rd. This is the first week of a brand new month of June. Don't forget, this is a quadruple witching week. A what? A quad witching week, a quadruple witching. If you need help on that, go to my blog. You're going to hear me talking about that later on in the month. Just be aware, though, 16th through the 20th is quad witching week this month. Every 3 months, 4 different asset classes expire. All right? We'll talk more about that in a moment. Now, we do not have to wait for tomorrow. We've got some important news here tonight. I've got the retail sales in Australia, followed by more manufacturing numbers out of China. So big news here starting at 9:30 and then 9:45. So if you're trading the happy hour session here in Los Angeles, we call it, right, 7 o'clock Eastern time, 4 o'clock Pacific. If you're trading the happy hour session here, if you're trading the Asian session, you've got some fireworks coming your way. If you trade in the European session tomorrow morning, you get a lot of other fireworks to look for here. You're going to see there's a lot of news here for tomorrow. We've got news out of the Reserve Bank of India. Think of that like our FOMC day here in the U.S. We've got 12:30 a.m. We got the basically Bank of Australia announcement. Again, very similar to our FOMC day where our Federal Open Market Committee gives our policy announcements. And we got 2 o'clock tomorrow morning. We've got our nationwide home price index. We then jump down to the construction number. Again, still out of Great Britain. And then we got PMI. We've got the HICP. What the heck does that mean? I have no idea what that stands for. I assume it has something to do with manufacturing. I can check that for you in a moment. We've got news here. How do I not know what that means? HICP. It's on the tip of my tongue. That's all right. We'll get it figured out for you. If anybody else knows the acronym there, I could go into it and give you more information right now, but it's really not necessary. As you guys know, I just need to know what time this news is, because the time of the news is all that really matters. The reaction to that news is how I'm going to trade it. So bottom line is, tomorrow morning you've got news here starting right out the gate. In fact, tonight, 2 a.m., 4:30 a.m., 5 a.m., and as we keep going lower here, you'll notice the only news we have tomorrow in the U.S. session, again, 5 a.m. news, we then hop, skip, and jump down to 10 o'clock factory orders. So we've only got 10 o'clock tomorrow morning in the U.S. Now, one of the things you should be looking at right now is, if you're a student of mine, we always have to keep an eye, because when we have London session news, that typically means a wider range going into the U.S. session, and a wider range going into the U.S. session typically means looking for what? Reversals early in the morning. All right, write that down. If we see a big range coming out of London, that means tomorrow morning at 7 a.m., between 7 a.m. and 8 a.m. tomorrow morning, if we see a large range coming out of London, all right, and if you don't know what classifies a large range, you've got to become a student. I will teach you all of this very important information. Tomorrow morning at 8 a.m., if you're a student of mine, we'll be looking closely at the size of the range coming out of London. If it's a wider than average range, we're looking for reversals because of all that news that will have pushed things around. So this evening, 9:30, 9:45, tomorrow morning, pretty much this evening, 12:30 a.m., 2 a.m., 4:30, 5 a.m., and then 10 a.m., and then we'll come back and we'll talk about, right, the Purchasing Managers Index coming out of Japan tomorrow night. Alrighty? So on the lookout for news overnight and into tomorrow. With all those fireworks on the news calendar now, let's start looking at what we have for charts for tomorrow. So we've been wondering here, what's happening with gold? Why is gold sitting here sideways here right now? Well, let me bring back up that news worksheet, because we have a highly anticipated announcement on Thursday morning. Thursday morning, we have the ECB announcement. Now, in my humble opinion, this is what gold's been waiting on for a few weeks now. This is nothing really new here on gold. But Thursday, June 5th, we've got the ECB announcement. Now, guys, they're talking about negative interest rates at this announcement. Negative. As in, we will pay you to take our money. Where do I sign up for that? As far as I'm concerned, that doesn't happen anymore. Can I get some of that, please? Somebody call the ECB, right? Somebody call Draghi. I would love to get. You're going to pay me? Sounds good to me. Negative interest rates. Now, as you can imagine, right, in the U.S., our interest rates right now are what? 0 to 1/4, right? So we're pretty much at 0% right now. Remember, that's the number. That's the percentage, that's the interest they're charging the banks, the big banks, who then lend that money to small banks, who then lend it to you and I in the form of auto loans, student loans, mortgages. So if you ever want to get a good idea of how much money these banks are making right now, the banks in the U.S. are borrowing this right now for 1/4%. How much are student loans right now? Right? Student loans used to be the rock bottom. When I was in college, it was what, like 2.5%, 3%? Well, thank you, Obama. Now we got, what, 7.5% for student loans? I just got a mortgage here in the U.S. for 4.25%. Insane. So think about how much money these banks are making off our students right now. Yeah, it's disgusting. It's disgusting how much money they're making off that. Think about that for a second. That's pure profit for the banks. Every student loan right now is making these banks, well, I'll tell you right now, if our administration, if our politicians were trying to make the middle class stronger and trying to make the big companies weaker, right, the too big to fail thing, yeah, didn't work. Newsflash, bigger companies keep getting bigger, and the middle class keep getting pushed into the lower class. It didn't work. I'll leave my opinions to myself. Come out and see me tomorrow afternoon. We'll talk more about that. But we've got, again, the rumor is flying around, we're going to see negative interest rates in the ECB on Thursday. Negative, right? Explain to me how that works. Where's my ticket? I want to get in line for that offer, right? That sounds like a pretty darn good deal. Here, take some money, and by the way, I'm going to pay you to do so. I like the idea of that. That sounds like a pretty good business idea if you ask me. So that's the chaos now. That's the potential. What in the are we going to see with potential negative interest rates on Thursday morning? I have no idea what to expect. I've been doing this for almost 14 years now. This is the first time I personally have ever seen a potential for negative rates, right? We thought zero was good. Try getting paid for it. So here we are. We got gold going lower again. Why is gold balanced right now? Because gold is reacting just like I'm reacting. Negative interest rates, and of course, interest rates are very, very highly correlated to gold because gold is going to be a shelter market. Okay, rates go down, gold goes up, right, and vice versa. We've gone all the way to the 1240 here in the daily chart. We tumbled here out of consolidation, and we just haven't looked back. We need to get some sort of retracement here so we can get some more sellers into the market right now. Nobody in their right mind right now is selling gold, and for good reason. I don't really believe in the term oversold, but if I did, this would be what I would call oversold right now. And you can see that big wick down at the bottom here, right? Just whoop, right back up here once it tagged that 1240 area. All right? So that's what's happening in the gold daily chart. Now, as you can see here, as we start going through gold here, we fell out of bed here early last week, and just never looked back. We need a retracement. And that's what's really making this so difficult for gold traders right now. I'm not going to sell short because I'm right at support. I'm oversold, if you will. And again, there's nothing keeping these markets from continuing to sell off, which means the term oversold is really a very incorrect way to describe it. We are moving lower, but right now we are priced at a discount. And I do not like selling at a discount. All right, I'm not going to sell my home at a discount. I want to sell my home when it's at a premium, and so would you. If I had a pocket full of gold coins right now, would you want to sell them when the prices are high or when the prices are low? Right, when the prices are high. So right now, the only game in town right now is to buy gold, right? But that's a big what if ahead of that ECB meeting on Thursday. All right, no guarantees, but I assume after we figure out what these shenanigans are going to look like in the ECB with these possible negative interest rates, that's going to be a big deal for gold. So bottom line on gold right now is I need this to retrace. We need to get this up off the lows so I can start selling it again. You can see we get a downward trending channel. We're below all the key moving averages. Everything looks delish here to be selling short, but I just can't sell it at the discount. I got to get it off these lows. And that's just my personal opinion. I like to sell when things are at a premium. Now, here's my last anchor chart. And you're going to see here, if you want to sell gold, here are your 4 ranges to look for right now. There they are, right then and there. So what I'm looking for here is, again, you're crazy to be selling this thing at this low right here. All right, if we do go lower, then fine. I'll then look for another selling opportunity once we go lower here. But I got to get new lower lows here below this 1240 area first. So what I'm going to do is I'm going to look for selling short 51.3, 57.1, 73.1, and 91.3. Those are my 4 zones overhead where I'm going to be looking for selling opportunities here on gold. Again, don't expect much out of this thing here until after that ECB announcement. And then even then, expect to see a little bit of some chaos. We'll have to wait for this thing to settle down a little bit after Thursday. All right? But definitely now you've got your plan. I want to sell short on gold, but I can't do it until I get off these lows. Moving forward here now, from the funny yellow metal, now down to a very, very balanced, a very difficult market right now on the Russell. Now, when I say difficult, I mean difficult for me to anticipate where the next few days are going. Here's the good news, though, boys and girls. Guess what? It doesn't matter. Because I could tell you right now, Russell's going to go through the floor tonight. It's going to drop like a rock. And if it doesn't and it goes higher, I'll just buy that with the wave pattern long and make money anyways. So one of the beauties about being a day trader is that I can be wrong and still be right. I can be wrong, but be rich, as we always say in our training sessions. The beautiful thing about being a day trader is that I can be wrong and still make a lot of money in the process. And we also try not to use that P word, right? That old predict, right? We don't want to predict the future, because when we predict, we set ourselves up for failure. Now, I'm anticipating this because I want to give you guys some ideas of what the scenarios will look like in the future. But I have to remind you here, though, that when I try to predict, two things happen. One, I set myself up for failure. But failure does not, you can't fail if you make money. So if I predict this price going higher, but I'm wrong, it rolls over and I sell it short and make money, am I really a failure? No. And that's why I tell my students not to try to predict so much, because it sets yourself up for failure. The second thing that predicting does is it now subconsciously, it makes you blind to everything else, right? So if I was to say right now, I'm going to predict the market going higher, subconsciously right now, I'm going to ignore all the clues that tell me, no, Joe, this is probably going to go lower. Every time I see some divergence or I see a lower high, I'm going to ignore it because I'm rooting for those buyers. So don't try to predict. And again, I know it seems like I'm predicting right now, but what I'm doing is I'm giving you some strategies for the three different scenarios coming up: sideways, higher, and lower. Now, we've been talking about this for a week now. This Russell, right, I can almost hear it, right? I can't breathe. I'm choking. I'm stuck. I'm stuck. I've got the 43.6 above. I've got the 16.9 below. And I really hope we don't sit here very long, because this Russell has been a fun, moving market over the past few months. And this just might spoil the fun for a few days here. You can see, and again, we talked about this last week. I've got this trend line I can draw in over the highs. We've got trend line coming in off the lows. We got this potential for banging our head against the wall here, up and down, until something breaks this thing out. So if you're wondering right now on the Russell, why is this thing so shaky? Why are we so herky-jerky right now on this Russell? Yeah, this is why. It's because we have that anchor chart, that daily chart. We're stuck in the mud there between those two levels of support and resistance. Here's another good example of it. Banging my head against that 43.6. I've got my key moving averages that are holding me up right now, 1120. And we got support down here, 1112. So as you can see right now, we got resistance overhead. We've got support levels below us. And this has become our range. We talked about this last week. Not a lot has changed from this week to last week. One thing that has changed, though, is that we finally broke out of that range. Remember this from last week? Remember I told you guys last week, right? If we get below it, we're selling short. Yeah, that's right. There was easy money made on that last week. Late last week, easy money selling short below that range. We talked about it last week in the newsletter, right? Go back and watch it for yourself. We had that narrow range, and my exact words were, get below it, we're selling short. We did. We sold off all the way. And I told you guys about this trend line here acting as support. And so now we can see here, we're stuck. We're stuck. I've got my support below me at 1120. I've got resistance above me at 1131. Yes, we are bearish. So we will be selling short at 31.9, 39.5. But guys, we got to take our profit quickly here. We got to be aggressive at taking profit right now in the Russell, because as you can see, we don't have a lot of wide open space right now. This Russell really got slopped up towards the middle of last month, and it's been really struggling to get out of its own way right now. So I can see we're going lower here right now. We got lower lows, we got lower highs. I'm below the short-term moving averages, but just tagged my long-term moving average. So we are not out of the woods here yet, because these buyers could definitely keep trying to push this baby higher. So I'm going to keep looking to sell short, right? We got 31.9, we got 35 even, we got 39.5 and 42. So I want you to think about the three scenarios for tomorrow in the Russell, all right? Think about the three possible scenarios. I'm not going to predict. I'm going to tell you what to do in different scenarios. Scenario 1, price goes higher. What do I do if price goes higher? I'm looking for selling opportunities at 31.9, 35, 39.5, and 42.2. What if price goes sideways? If it goes sideways right here, I'm going to define the range. I'm going to buy the lows and sell the highs. If we turn into a balanced market this week, right, again, because of this support and resistance surrounding us right now, I don't think it's going to happen. We get a lot of news coming out. I don't expect it to happen. But all the same, though, I want to be prepared for it. If it goes sideways, find the range, buy the lows, sell the highs. What if price goes lower? Well, if price goes lower, I'm selling short. I've got myself under my key moving averages. We made the lower low here and stayed below that low. So we should be safe here selling short. But the only thing I'm worried about now is running into that 1120.7. I'm looking to sell short pretty much right now. I got targets at 20.7. I have targets at 16.9, 15.3, 10.2, and of course you get the 11.12, right, and the 0.4. So all these levels below me become targets now as we go hunting for those green boxes. All right, bearish on the Russell, but again, be aware if it looks balanced tomorrow morning, we're going to be trading it balanced as well. But my gut tells me, though, right now is that we're going to try to keep grinding lower here this week, right? We'll keep trying to grind lower here this week. We'll see what happens. We'll see what happens. Again, tomorrow morning, I'm going to come into my office, turn on the computer, load the charts. I want to see what's my trend, where are my levels, and what's my market personality. If you want to be included with all that, come out and see me tomorrow in the trade room, and we'll do that like we do every morning with our morning routine. Let's keep moving here. Last but not least, we go from the mighty Russell to the black gold, the crude oil futures. As you can see here, a daily chart on crude. We are kind of stuck right in the mud here right now inside this price wedge, and you'll notice there's definitely a bullish tone to it. We got higher highs, we've got higher lows, but the big concern right now is look where we are. Look where we are. We're between the highs from last August and the lows from January. We are right in the middle of this massive range right now. So your guess as far as long term, boy, who knows, right? Who knows? Again, we got the issues in Ukraine, keeping prices propped up. We got the manufacturing slowdown in Asia, dragging prices down. We'll have to wait and see what happens here because we are definitely balanced in the middle. Moving forward, though, here, I want you guys to see as we progress here on crude, now we start to get some levels that we can trade with. The best buying opportunities that I can see right now are going to be 101.45 to 168 or 99.59 to 98.95. So hopefully here, sometime in the next few weeks, we'll get this price down to that 101.45 so I can buy this baby with a target up around 106. Okay, as you can see here, we're making new higher highs, pulling back, higher lows, higher highs. Now the next leg down would be to 101.45, and hold that thought. Okay, hold on to that thought at 101.45 because now we're going to go down to our most important anchor. And here we are. Now this is filled with clues. You might think, though, this is the same chart as the Russell. Doesn't this look similar? You're right. The Russell and crude are almost identical here this evening. And the reason I say that is because we have a run-up that happened last week. Remember that, guys? We made a killing on crude last week, and we talked about it every night in the newsletter. It was a great move on crude. We nailed it. We were thinking we could be at 110 by this time during the following week, but not so fast. We saw things go sideways, and then sure enough, we're now collapsing back down. That tells us that bullish personality here now, taking a bit of a breather, but we're not quite out of the woods yet. You can see here, same thing we had on the Russell. We got this key moving average here, 102.35. Key moving average, 103.06. We get a little bit of a tough spot here on crude. What's my trend? My trend is clearly down. I have lower lows, I have lower highs. I have a red cloud. We're below the short-term moving average, but just like on the Russell, we're stuck here just a little bit lower here, and we can finally say we got that broken down. That's going to be a really big, important thing. So now what I can do is I'm at a discount. I need to wait to sell at a premium. Let's plan for 3 scenarios. Scenario 1, what if price goes higher? If price goes higher, I will be cheering it on the whole time, because what I'm looking for is at 103.02, at 103.55, at 103.99. And guys, I have no idea where this turns around, but eventually we're going to see that price turn around. And once it turns around, that's when we're back to the selling on the way back down. So if price goes higher, I'm selling at one of these 3 areas. Heck, it might go higher. Give me one choice, right? One shot to sell short. It might go higher again, and give me a second chance to sell short. I've got 3 areas above me. What if price goes sideways? If price goes sideways, heads up here. I have an important support level here at 102.01, another one at 101.50. If price goes sideways here, just like on the Russell, I'm going to mark up the highs and the lows of that range. I'm going to buy the lows. I'm going to sell the highs. What if price goes lower? If price goes lower, we'll finally get below that 102.35 support, and we're selling short to a target down here at 101.44. If we do push lower, I'm looking to sell short down to 101.44. If we push higher, I'm looking for selling opportunities starting at 103.02. If we go sideways, I'm marking up the range, highs and lows. It'll probably be from London's highs and London's lows, right? Because we have that news overnight tonight, and I'll be trading it sideways like we do every day when we find a range-bound market. So we got bearish on crude, bearish on Russell, sideways, a little bit bearish on gold. All 3 of these markets now, we're looking for selling opportunities. Now remember, all of these charts are available for you to download right now. So head on over to my blog, sidewaysmarkets.com, and download a copy of these charts. Get them ready for tomorrow, and come out and see me tomorrow morning as a brand new student in our live trade room. If you're wondering how we make profit on all the information that I'm giving you for free this evening on our newsletter, if you're wondering how can you capitalize on this knowledge, I want to teach you every single thing that you know to be successful, and to do it in a safe way. That's the key. See, any guru out there can tell you, oh, go buy, go sell, but can they do it in a safe environment? I don't want you guys to go through a lot of hassle, a lot of stress, a lot of wasted time and effort. We offer 3 levels of membership: beginner, intermediate, and advanced. My wife Megan and I, 10 years ago, that's right, we just celebrated our 10-year anniversary in 2014. It'll be 11 years in 2015. We've been doing this. We've been around longer than any other trading education site on the web. Check it out. You'll see what I mean. All right, I've been doing videos for a long, long time, and I am so excited to welcome you into our community of day traders. We've got students from around the world, brand new traders, experienced traders, scalpers, swing traders, automated traders, guys, and I can't wait to share it all with you. We offer a free trial. My free trial is going to teach you more than most people are going to charge you for. And I think my track record speaks for itself. I want to thank you so much for watching tonight. I hope you had a great weekend. It's time to make some money this week. We got a busy, busy week ahead of us. We'll see you tomorrow morning at 8 a.m. in my live trade room. Or if you're on my free trial, I get a special invite for you to come join the trade room tomorrow afternoon, and we'll take some trades there too. Thank you so much for watching. My name is Joseph James from our entire team at the corporate headquarters in Los Angeles, California. A sunny Los Angeles, California here this afternoon. You guys make sure you learn it so you can earn it, and I'll see you here at same time, same place tomorrow. Don't forget to share this with a friend, and we'll see you next time. Adios, amigos. Bye-bye for now.